if you're actually disciplined about, kind of the raise and the use of proceeds and the type of investors, you can actually go ahead and get enough interest that you basically guarantee the next round.
I wanted to talk a little bit about your experience with startups. So, were there anything that happened this week where you just thought, "Gosh, I really wish this founder did blank," or "I really wish that this founder knew this"? Is there anything that happened in a pitch or in a deck or in something that you read?
I have something that's happened that I've never seen in the 20 years I've been doing this, which was, quite amazing. And I think there's some lessons to be learned from this. So we actually are closing our first investment from the fund. We did our first closing end of March. We've had a pipeline of companies, proved our first investment a couple of weeks ago, and now we're closing. And the first time that I've ever seen this happen, where the company, which is raising a small seed round, very experienced team, great background, focusing on a very exciting opportunity in the NFT space, where obviously there's dozens and dozens of companies going after it, but no team quite with the background and experience that these guys have. They were really disciplined about how much they wanted to raise. And so they're raising a very small amount, 3.5 million. And they were very specific about what they were going to use it for, what their roadmap was in terms of getting to the next round with various milestones. And they had a particular view on the set of investors that they wanted in this particular round. Now, as they were talking to different investors, because of the team's background and profile, they got a lot of investor interest. But to their credit, they stayed very disciplined. So instead of, increasing the round size like, typically a lot of founders would, and for good reason, understanding that you can de-risk the opportunity by raising more capital, increase the valuation, they stuck to the guns and just kept this very modest $3.5 million round. And what happened was there was so much investor interest that before they even closed the round, which is happening today, yesterday they received a term sheet for the next round at a substantial increase. I've never actually seen this happen before you actually close this round of financing. And I think the lesson learned is, quite frankly, if you're actually disciplined about, kind of the raise and the use of proceeds and the type of investors, you can actually go ahead and get enough interest that you basically guarantee the next round. In many ways, instead of trying to increase the round size and getting further diluted as the founding team, they basically have done it in a way that will ensure that they reduce their dilution at a higher valuation with very prominent investors coming in. So I thought that was really interesting. I'd never seen that happen.
Wow. So I understand they're just closing maybe their seed. It sounds like a seed round.
Yeah.
And they've got pre-commitments for their Series A that's going to be happening in like a year or a year and a half.
I don't know if it's going to be a year out. They're thinking more like 6 months, but after they build kind of the initial prototype and whatnot. But getting this term sheet from a very prominent, very valuable investor in their back pocket is just, I've never heard of that. So again, a tribute to the team. And again, tribute to the team having that discipline of sticking to their guns in this particular round, knowing that, they would be diluting themselves further by entertaining additional investor interest at this time.
Is this the famous FOMO that I've heard about, like creating FOMO with VCs? Is that what's happening?
I think that could be part of it. But again, I think at the end of the day, different firms have different criteria, meaning, in terms of ownership stake that they want in part of the deal, right? So the typical, Silicon Valley, Sand Hill Road, Series A investor, with their investments wants 20% of the company. Well, this round, nobody's getting 20% of the company. In fact, the whole round is not going to be 20%. So instead of kind of, fighting over this or trying to negotiate with founders that are not comfortable, giving up that dilution this early, they've done the smart thing and actually have gone ahead and preempted this for the next round of financing. So I think it's a win-win on both sides.